All right, Pedro. So why don't we start off with what the U.S. is facing right now, and it's the government shutdown. Your view. What do you think would happen if it lasted a few weeks?
Well, what is there to say about the U.S., the U.S. political outlook?
Yeah, I know.
It's such a complete mess, and I think it's only going to contribute to the erosion in the faith and credit of the United States. And I think Moody's was right to say that this is a credit negative event. And I think that even though we know that every time that there's an event like this, the people pile into treasuries because it's the risk-free asset, I think over time there is an erosion that we need to keep in mind, and we don't know when that breaking point is, but we sure seem to want to keep pushing things that way. I think we could have a significant economic impact in many different ways, right? We could have a sharp slowdown in economic activity. We could have a Federal Reserve that perhaps doesn't have enough data to make a decision and maybe punts on a rate hike when it might otherwise have hiked because it doesn't have enough data. So there's a lot of implications, I think.
All right. So I'm looking at the yield chart, and it felt like the 10-year really reached a crescendo up here. And we're now back inside the channel. This is kind of a blow off. And I know you're talking about people might be buying bonds and notes in here. Actually, the TLT, Pedro, finally took out the October low.
Yeah.
And I don't know who would still be long now. I'd say that we're at least in a capitulation phase. Could it be that the government shut down and now we're not going to get an NFP next Friday if the market is shut down? What are people going to do as far as trading? Just trust your charts, right? How else do you trade if we're not going to have government data?
Absolutely. I don't think that people are going to suddenly be, basing their trades off of flash PMIs, right?
Yeah.
You mentioned the 10-year. This run in 10-year yields has been pretty stunning, and I think it's very deeply related to the Fed and the Fed and the market absorbing the Fed's higher for longer message in a way that it had not before. And also, I think it's like the market interpreting the Fed's shift in stance. I think it goes beyond higher for longer in a narrow sense, in the sense of like, they're going to keep rates at peak levels for a year and a half. I think it has more to do with the longer we are in this higher inflation and rate regime, the longer people think it's more of a permanent feature of our economy and less of a temporary or transitory blip, if you will. And I think markets are adjusting to that.
And this hasn't helped, has it?
No, that absolutely has not helped.
Yeah, and I know people are complaining about gas prices now. I'm hearing it everywhere. People are paying $6 a gallon here in California. I know that's nothing compared to Europe, but for Americans, that's near all-time highs, even though crude is way off all-time highs.
I can't believe it's already at 6 in California. It's still around 4 in DC, but it's definitely up. And there's no sign of immediate relief. So,
okay, I talked to Lakshman Akuting this week, and he said he gets aggravated paying $5 for a cup of coffee. It stopped going up, but still can't get used to $5 for just a few beans and water.
I agree. I make my own at home, to be honest, because when I go out, it's a lot of sticker shock.
So everyone's feeling it. I don't care, what part, except maybe the 1%. They don't care. It's like they have a printing press too.
And to your point, not only is everybody feeling it, I think the idea that inflation expectations are still contained is kind of fanciful, right? Because
you're right.
Whose inflation expectations? Like, don't me and you and Lakshman, who's a good friend, by the way, we all expect to pay. We all expect to pay more when we go to a restaurant after a couple of months, right?
Right.
So whose expectations are contained? I'm not quite sure.
Yeah. And I mean, the housing, a friend of mine who's, worked hard all his life, and he's in a position where he has to find a place to move, that people in Phoenix, Arizona, where there's no shortage of sand, are charging 1,300 for a room in a house.
Wow.
Now, how do people?
Wait a second. I live in here in the Phoenix area. So
what would you rent a bedroom out for?
For a bedroom?
Yeah, a room in your house. People are doing it all over the place. They
definitely. You could. Yeah, I think that's exactly what you could charge for it. There's I live in the Scottsdale area, so in our popular area of Scottsdale right here, it for a 1-bedroom apartment is $2,500. 1-bedroom apartment. So that makes sense.
So how does someone who's making 50, maybe has a wife and kid, afford it? I mean, it's I think there's a lot of people feel like, what happened to the world where even I, through most of my life, have been able to keep a roof over my head and take care of myself, and people I love are unable to do so because of these prices. And nothing could really be done about it anyway, unless we have, it's almost like we need a major depression, Pedro, to, shake things down and start over.
And yet that's not going to help anybody at the bottom end of the ladder either, right? So
so
I'm not quite sure what the solution is for ameliorating
housing. I don't know why they just have BlackRock cough up all the properties they bought in the last 10 years that they're renting back to people who were foreclosed upon.
Well, I was going to say, taking this sort of major investor money out of the housing market and treating it less like a volatile financial asset would help, certainly.
Yeah. Any view on what's happening in Japan? A few of our guys think we're real close to intervention taking place. And do you think that the Fed might cooperate with the BOJ?
I don't think so.
Okay.
I don't think there's any prospect for cooperation. I don't have any direct insight, but from what I read from our very well-informed Japanese colleagues, intervention is a strong possibility. They're running a monetary policy that's not in concert with their desires for the currency. So there's an inherent conflict there.
Okay. Dollar. They say that Forex is a great trending instrument. Look at this, Pedro. 13 weeks, all blue candles, relentless. You think we could be peaking out here, at least temporarily? I was kind of thinking maybe we get a shake to 104 and then go again.
I don't know, man. I'm loath to make Forex predictions because you guys are better at that than me. But I mean, the way I look at it, I don't think, at least from the patch that I pay attention to and cover, I don't see the sort of Fed hawkishness and economic bullishness that we've had versus our peers. I don't see that differential kind of narrowing anytime soon. So I'm not really sure.
So we're still the best dirty shirt on the globe.
You got it.
Okay, so what was your thought about the Italy's 40% windfall profit tax, which here in the U.S. mainly happened to oil companies, that they issued against banks in Italy? Their windfall I didn't even know they had profits in Italy.
I don't have any deep thoughts on the Italian situation, other than it seems like a natural kind of populist reaction from a government that is very I guess calling them populist is a nice way to put it. And I think they're already backtracking on it to some extent, right after a very adverse market reaction. So I'm not sure if it's actually going to be as large as it was first advertised.
is the bearishness in China warranted?
I think it is. I mean, it seems like they have more problems than they have solutions for, and it seems like they lack the policy tools to address imbalances that have been building over, years and years. So my big thing is the Fed seems to be very sanguine about the disconnectedness of the U.S. economy from China and from the Chinese financial system in particular. And I wonder if there aren't more linkages and connections that might sort of come to pass that we have not thought of.
Okay.
Given the sort of global nature of the investing universe.
Yeah. So, do you think it'll be overt, or it's just like kind of a black swan kind of thing? Because it was pretty overt when they stopped using Apple phones, government officials. What are you thinking? I hear that they're trying to thaw relations with us, and that the big month for China US is going to be the Taiwanese elections in January. That if there's another pro-independence president, that would be kind of like the last nail in the coffin, that they were going to have to consider a hostile takeover.
Yeah, I mean, I don't see relations thawing anytime soon, and it certainly sounds like if there's actually if you look for one point of rare bipartisanship in Washington, it's both parties' kind of vilification of China and
yeah,
use of China as a kind of foreign enemy cudgel, and so I don't see that waning anytime soon. If anything, President Biden has extended the policies that Donald Trump put into place. So I don't see that coming anytime soon.
Could you imagine that we could have a presidential campaign with one of the candidates being impeached and another one on trial?
It goes back to my original comment about the state of U.S. politics, right?
Yeah, Rod Serling couldn't have written a script like that.
Exactly. It's pretty ridiculous and pathetic. And I'm glad that in my youth, I thought that covering politics was all the rage before I got into finance. And I'm glad that I'm writing about finance and not politics, because it's ridiculous to the point of being boring,
Yeah, it's over and over.
There's no substance to it, it's just trash. So.
Okay. So, we've had, I don't know who you're talking to, but we had this risk off move after the Fed. Wasn't what the Fed did, it's what the market did after the Fed.
Yeah.
Is this a beginning? Do you think from the people you're talking to, the bulls are coming back in, just calling this a normal corrective decline, and that even in the face of government shutdown, that it's clear sailing for equity markets from here?
Yeah, I'm not so sure about the clear sailing. I think we are at an inflection point. I think things are getting dicier, and I think the fourth quarter might be a memorable one. So,
okay.
Yeah, I think that the Fed is not going to relent as easily as markets believe. I recently spoke to Steve Kamen, a former Fed board economist, who's now at the American Enterprise Institute. And his take was that despite sort of chatter that the risks of over tightening are becoming more balanced with the risks of under tightening, he said that from a purely kind of legacy perspective for Jay Powell, he called the risks, quote, wildly asymmetric, in the sense that if you take door A, which is the over tightening door, you maybe cause a recession that everybody kind of expected anyway, and you go home with the legacy of having fought inflation. If you take door B, you risk, an inflation that like tarnishes your legacy and makes you the modern day Arthur Burns. And as he put it, that's the last thing that Jay Powell wants. So his path of least resistance is still to remain as hawkish as possible.
Okay. Markets have been ignoring his message for a long time. 10 years still coming off today. Anything that, you're getting ready to cover, have covered recently that you want to share with us today that, perhaps with my, wandering questions that I've brought to you that you think it's important for people to keep an eye on, Pedro?
Sure, a couple things. Well, the first thing that comes to mind is I was very baffled by the Chair Powell's answer to the question as to whether the soft landing had become his baseline scenario, because he clearly answered no. He was very nervous to put his approval stamp on a soft landing, if you will. And yet, if you look at the SEP, the Fed's forecasts are for a soft landing, right? They expect inflation to come back down to target without unemployment going much above 4%. That's basically the definition of a soft landing. So there's a disconnect there that I think they're going to have to adjust. Another point I would mention is that Claudia Sahm, former Fed board economist, I spoke with her last week. She made a really important point that the Fed is using the SEP as a forward guidance tool, but it's a highly imperfect one, even more imperfect and more imprecise than interest rates, because you've got these uncoordinated forecasts that come together to form a median. And she said they really are not coordinated. And she was one of the forecasters there, so she would know. And so you're trying to send this signal, but you're sending a signal that comes from all these disparate signals. And so to her point, what they wanted to do was pause. What they actually did was hike interest rates by repricing the entire curve. So I thought that was an interesting disconnect there. And the third thing that I would bring up that's on my radar that keeps coming up, both from market participants and from sort of Fed watchers, is this notion of an inflation target and what it actually is.
Yes.
If you look at the Fed's tolerance for above 2% inflation, they don't see inflation getting down to 2% until 2026. So that's pretty, that's a long period of above target inflation, which suggests that you're okay with overshooting the target for a while. And you keep in mind that the Fed is going to begin its review of the framework that was much maligned in the ones that they switched in 2020 to make it sort of more dovish and more pro-employment. They're going to be reviewing that, and the review will end in 2025, but it really begins in earnest next year. And there's a lot of indications that they might move toward something like a target band that's less precise and perhaps more achievable, something like 1.5 to 2.5. But again, that has big implications for markets, and I think that possibility and that idea is part of what's underpinning this move higher in 10-year yields.
Okay, buddy. Well, I'm showing your site and where your work appears, and
I appreciate it. If you go to the policy tab, and then you see the Fed policy exclusives there. If you click on Fed, that's where all of our content is right there. Just stay on policy. It's a little funky, but just go down and there you go.
All right, there you go. So here's Pedro's writings, and it's kind of the Fed. It's hard for me to understand. I wanted to wrap it with this question. Do you think there's a possibility of some type of liquidity crisis?
I do.
Okay, because I know some people that are pretty conservative have said that. And I mean, Joseph Wang isn't exactly, someone who is, seeking, to shake people up. And I think he's written about a potential liquidity crisis. How would that evolve?
I agree. I take his warnings very seriously. And I think actually that the spike in 10-year yields is not, it might be an inkling of what's happening there, right?
I see. Okay, so crowding out, and just is it because of all the supply?
It's a real confluence of factors that's kind of a nightmare scenario. You've got a huge amount of supply and a large amount of concern about who the potential buyers are. All these captive buyers that used to exist are now gone. So the Fed was number one, and the Fed is now winding down its balance sheet. Japan and China are two others, and for reasons we've already discussed, they might become less keen as buyers. So, that leaves kind of domestic investors.
Or the Fed. Do you think the Fed?
But the Fed would have to intervene, right? And they would, of course they would. If there was a Treasury market meltdown, they definitely would intervene. But then they would be reversing some of their tightening, and then we'd start the whole party all over again. So I'm not sure how it's going to play out, but I take Joseph's warnings very seriously, and he's not the only one that's concerned about it. I think even people at the Fed, I mean, it surprised me when I spoke to Jeremy Stein, who's a former Fed board governor, who's very in tune with this finance stuff. He's on the Financial Stability Board, all kinds of advisory boards on this stuff. And he basically said to me that, like, even if you implemented all of the solutions that he and folks like Darryl Duffy have outlined, the market would still be prone to liquidity shocks just because of its structure and size. So that's not very reassuring that even the reform-minded people who have a list of reforms that they think would help, even they don't think that it's kind of a completely soluble problem.
Yeah, so it's more of a question. It's not if, it's just when, which is the art of this whole thing, the when.
It really seems that way. Yeah.
All right. Well, great conversation, Pedro. Again,
thank you, Dale. My pleasure.
I told people I look forward to talking to Pedro because I can ask him everything. And
I may or may not have the answer, but I try my best.
All right. Well,
hey Dale, can I just jump in here really quick? And I just want to say, Pedro, we sure do miss you. Yeah, I know. Sorry, I just wanted to say sorry, Dale. I just want to say we miss you in the room asking questions to Fed chair. I miss seeing your face.
Yeah, I'm kind of playing a strategic game there where I don't often get a question if I go in these days. And so I just send my colleagues in and we play it that way.
That's
They're
good.
more likely to get a question than me. So I figure we maximize MNI's chances of getting a question.
Yeah. So just so everybody knows and understands your expertise. I mean, you've been in the room with Fed chairs for how many years now? I mean, it's been
almost 20.
Yeah, I was going to say, I've seen your face for a couple decades now. So that's the kind of experience that you bring. And so when Dale's asking you these questions, people that are listening into this, whether they're catching us on Spotify or they're catching us, live here, is that they really should understand your expertise and your experience in this industry. So anyway, thank you for being here. Really
and they avoid Pedro because he doesn't throw softball questions up there.
I learned the hard way that hard questions might be good for you, might get you Twitter kudos, but they're not really good for your professional longevity. So
yeah, you're always better being an ambassador.
Absolutely.
Right.
And if I could throw in a humble brag, Blake, I appreciate that comment. And actually, I've been told by Fed board staffers who were involved in the communication side that it was my reporting pointing at holes and lack of Fed transparency back in my Reuters days that actually led Bernanke to want to create a press conference in the first place.
So, I'm going to say without prejudice. I love that shit. That's awesome. All
right. Well, thank you, Pedro, so much. I'll get a hold of you and we'll get back together in the winter.
Sounds good, guys.
We'll hope it's not an economic winter and just a seasonal one.
Absolutely.
All right, buddy. Pedro Da Costa, follow Pedro, go to his site at MNI and follow him on Twitter at P Da Costa. Thank you, Pedro. Have a great weekend, buddy.
Thank you, Dale. All the best,
All right.
everyone.
Thank you. And everyone, thank you. Have a great weekend. Don't just count your pips, count your blessings and do your work and be ready with your plan before the markets open. And the team and I will see you next week. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.